Federal Reserve Building, Jerome Powell speaking at a press conference. Headlines: rate cut coming, inflation shows, Fed response, markets react. A major shift may be on the way from the US Federal Reserve. Fed Chair Jerome Powell has thus signaled that the central bank is likely to cut interest rates in September, marking a potential end to the most aggressive tightening cycle in decades. Economic charts showing inflation decline, cooling jobs reports, and interest rate trends. Speaking at a financial policy forum this week, Powell said the Fed is prepared to adjust rates in response to slowing inflation and weaker than expected job growth, both signs that the economics may need a nudge to avoid a sharper downturn. Powell at a podium, Jerome Powell said that we are seeing progress. Inflation has continued to move down toward our 2% target and the labor market is softening without breaking. Here's the data that the Fed is watching. Inflation has cooled to 2.4% year over year, down from over 9% at its 2022 peak. Unemployment ticked up slightly to 4.2%, with job openings falling across sectors. And wage growth is moderating, a sign that demand is easing. Side by side of key economic indicators, CPI, unemployment rate, Fed funds rate. Markets have been quick to react. The Dow surged past 40,000, the S&P 500 hit a new high, and investors are now pricing in a 70% change of a rate cut at the Fed's September meeting. Market analysts on CNBC say that Powell is threading the needle, trying to ease policy before the slowdown becomes a region. Small business, families shopping, people at banks. For American households, a rate cut could mean lower credit card interest and mortgage rates, cheaper auto loans, and easier borrowing for small business and home buyers. But the Fed still has to walk a tightrope. Powell earlier this week, Powell said that we are not declaring victory. These are still risks of inflation rebounding if we are easy too soon. Some economists warn that cutting rates too early could reignite inflation, especially with energy prices rising again and housing costs still elevated. But the economic growth showing sign of a fatigue and no signs of a hard landing just yet, the Fed appears ready to shift gears. It's a delicate moment for the US economy. The Fed's next move could shape everything from housing markets to the 2024 election narrative, where the states of the economy will be front and center. September rate cut lows, Fed's balancing act begins. All eyes now turn to September 18th, when the Federal Reserve could officially begin into the pivot from fighting inflation to supporting growth.